There is movement on several fronts in the European debt crisis this morning. Spain, as we told you a few moments ago, successfully sold $3.9 billion of five-year bonds, beating its target. Meantime, European leaders are trying to put together new measures to stop the contagion from spreading. The ECB is meeting today in Frankfurt, and that's where we find our next guest, Joerg Kraemer. He's chief economist at Commerzbank. He joins us now over the phone. Joerg, let's talk about the bond auction results from Spain and from Italy. We discussed them a few moments ago. You weren't with us at the time, but the market seems to be responding positively. Do you consider these to be successful auctions in light of all the concerns swirling around the EU right now?
Well, they were successful, as also Portugal yesterday managed to successfully sell their bonds, but this does not yet mean the end of the sovereign debt crisis, to be very clear.
Okay, not the end of the sovereign debt crisis. How long do you think this momentary calm can last? We see the euro firming, we see European bonds across the board in Western Europe firming today, and they responded in kind yesterday after the Portuguese debt auction. How long can this calm last?
Yeah, well, this calm may last a couple of days, but you have to understand that below the surface, the situation is quite critical. Most of the peripheral countries did not even manage to bring down their 2010 deficit to GDP ratio as promised, and the economic divergence between Germany and the ailing peripheral countries is also deepening. Therefore, it's only a question of time until the problems return to the market.
Joerg, how much do you think it's costing the ECB to prop up Portugal, for example, in the bond market, to prop up Spain, perhaps, and maybe even Italy right now, keeping yields down and allowing them to sell debt at the prices we saw today?
Well, it's not so much financially a problem for the ECB. Since May, when the ECB started its purchases, it has sold roughly 7 billion bonds, in terms of 7 billion euros, and this is nothing compared to what the Fed in the States did in direct purchases of government bonds. But the ECB has to pay a price as far as its credibility is concerned. There's a split within the ECB Council. Bundesbank President Weber, for example, from the very beginning said that he's not in favor of purchases of government bonds by the ECB. Therefore, the price is not financially, but in terms of credibility.
Okay, so the ECB's credibility hangs in the balance. Just a few moments ago, you said that the period of calm may only last a couple of days. What's going to be the next shoe to drop?
Well, I think despite the successful auction of Portugal yesterday, there's a significant risk that Portugal, in the end, will also ask for support by the European Union and the IMF. And then the next question is, of course, Spain. In terms of its reforms, Spain has been very successful. It's the only peripheral country which kept its promise to bring down its deficit to GDP ratio as laid out in the stability program. It is also successful in bringing down wage growth, and they also liberalized the labor market. But in the end, they have to convince the investors, which tend to be very conservative and who already have lost a lot of money with peripheral bonds.
Well, as you point out, at the end of the day, the bond market is going to be the kingmaker. Joerg, thanks for joining us. Joerg Kraemer, he's the chief economist at Commerzbank, advising us all not to be lulled into a sense of security with the euro firming and European bonds trading up in the wake of successful debt auctions by Portugal, Spain, and Italy.